What's up, guys? Welcome back. ARK has finally come back down to earth. VTI doing what VTI kind of does, and the stocks finally, after 3 weeks, are finally in the green. So pumped about it. Welcome to week 4, guys. In this video, I'm going to talk about 4 stocks that I'm adding to the portfolio this week. Kind of look at what the last 3 weeks have done for the portfolio, and with all the new subscribers from the most recent videos, people have been asking if they can see my options plays. So at the end of the video, I'll shoot over to my regular Robinhood portfolio. I'll show you all the options plays that I have working right now to show you both sides of the equation, because this right here, this $50 per week investing challenge, is definitely geared more towards the beginner, to show you that you can be investing in just index funds like VTI. If you want to be a little bit more speculative because you're a little bit younger and you want to mess around with ARK, you can use that ETF. Or you could try and beat all the ETFs, all the index funds, and try and pick your own stocks, which I'm seeing after a month is kind of difficult to do. So here's the investment challenge spreadsheet, and we can see ARK took off. It went for it like it usually does, came back down, and now it's kind of doing its kind of steady little thing. The markets over the last 2 weeks, with the 3-day weekend with MLK Day, I think the presidential inauguration, kind of things stayed flat. But we got this red line, ARK. ARK is killing right now. This is the total return, so we're doing good thanks to ARK. Right here, guys, is VTI. VTI just hanging in there. I fully expect just to get like a 6 to 8% return out of VTI, which is, the ETF for VTSAX. And then, like I said, the stocks, they have just not been doing well, but they creeped back up into the green finally. And here we see that they just squeaked up and over 0.39. ARK, guys, already 7% almost in just a month. It's ridiculous. I don't know if they can continue this pace, and frankly, I don't care. It's exciting to watch. And like I said, VTI, 2% for 1 month. You figure that's going to be a lot. That's on pace to do over 20%, which for VTI, I think, is crazy. And like I said, for the 1 month, I will take 3.89% all freaking day. If we dive into the portfolio spreadsheet that I made, which, guys, is available to all of my Patreon members inside Discord, I think there's a couple spots. Last week I said it was sold out. I did add some more spots. You can go over and check that. We are trying to keep it nice and tight. Not that many people, but we definitely want people to get in there and learn. So I did open some more spots, and you can get this spreadsheet with all my other spreadsheets as well. The things that I'm going to be looking at after we talked about last week. So I'm going to be getting this at a discount, this at a pretty good discount, and this at a discount. And I knew that I was going to say that I was just going to look for that 5% last week. But upon further thinking, if I can use $10 every week of this 50 to really lower my cost basis, that's going to be the case. So this week, I am going to add $3 to this. I'm going to add $3 to Disney. I'm going to add $3 to Square. And then I'm going to add $1 more to Neo. And that's going to be pretty much $10 of the 50. And that's going to lower down my basis. As we see last week, these greens means that the current price is less than the average cost that I currently have it for. So I'm going to lower my average cost, which is going to help out the portfolio long term. And I think investing $10 into that every single week is going to be totally fine. There's going to be another $50 going into VTI and another $50 going into ARKK. Like I said, it is a $50 per week challenge. But because I have a little extra money that I can put towards it, I kind of wanted to do all 3 from an educational standpoint, so I can show the difference between a total stock market ETF, a growth ETF, and then picking stocks as well. So every week I try and have a little bit of a lesson in there, or a little bit of education for the newer investors. Last week we talked about balancing the portfolio, which I just discussed. This week we're kind of going to talk about the difference between growth stocks and dividend stocks. And I think it's good to have a little bit of growth and a little bit of dividends. And people ask me all the time, why wouldn't you go for growth stocks? Or why would you spend so much money to get a little bit of dividends? Guys, really the investment strategy you need to be thinking about if you want to be a dividend investor or a growth investor, well, number one, I think you should probably have a mix of both. But if we think about it, the whole point of investing is to get money in return, right? We want to profit and we want our investments to grow. Well, dividends pretty much pay you that growth real time, every quarter, every month, or whatever. So if you are looking to live off investments now, then dividends might be the play that you want to go. If you want dividends to be paying for your bills on a regular basis and funding your lifestyle, then you might want to put money into dividend stocks. But if you don't need this investment money, maybe you have a great W-2 job and you know that you're not going to be touching this investment money until you're in your 40s or your 50s. Maybe you want to go more the growth route because you don't care what the short-term fluctuations of that stock are. You know that over time they're going to go up. That's why you might take the risk with a growth stock. Growth is like, I can not take the money now and I'll take it later. Dividend is, I kind of want to get paid now on a monthly or quarterly basis. So inside the Discord, guys, we vote every week. So this was the kind of the front runners here. We had Plug was up there. Amazon was a front runner. And those are for the growth stocks. I'm probably going to add those. I might not. I want to look at I want to see where Plug is really at as far as like, are they still mooning or have they kind of leveled off? We'll see. Like I said, at the end of the day, this is my money. The votes in the Discord are just kind of directional plays. And in here we have AbbVie. AbbVie's a big one. And some people would consider AbbVie like a growth stock and not so much a dividend stock. They pay about 2.5% dividend. Maybe they're more on the dividend growth side, kind of like Home Depot. And that's fine. There could be a gray area there. That's not that big of a deal. The other front runners up there were AT&T, probably one of the most popular dividend stocks going right now. And one that I've used, that I've been wheeling, trading options with. So we know my position on that. And everybody also knows that I'm a huge fan of Duke Energy. So it's really going to be a toss-up between Duke Energy and AT&T. Kind of have one in the back of my mind, and I'll explain it once we actually get to purchasing these stocks. So here is the current portfolio. It's off again because once again, I got another referral stock. So it's really off by $5.38 as opposed to my real spreadsheet. Over the last week, up 3%. And the last month that we've been doing this, up about 6%. As we can see, these are the total returns. So everything's pretty much doing good. Not too many things in the red. We have Pepsi, Disney, Visa. They're, like I said, the stocks, they're pretty much hit or miss. I'm right there at even. But I did say that I want to add into some of these red stocks, so I'm going to do that now. Like I said, just $3. I'll do them quick. I'll speed the video up. Now that I got those out of the way, I'll add the $50 to the two ETFs I'm using, VTI and ARKK. Now we can get to the growth stocks and dividend stocks. We're going to add $10 to that one. I know that I'm going to add Amazon, so I'm going to add Amazon really quick. And now I kind of just want to see what's going on with Plug. If we look at Plug, the last week, up 3%, up 83% in the last month. I kind of feel like I'm going to regret this, but like I said, this is partly a dividend, partly a Discord kind of challenge as well. Nothing really up there. They wanted Plug, maybe Home Depot, but overwhelming. All right, so you know what? YOLO, I'll go with it. Let's add $10 to Plug. That's what the Discord wanted. You guys voted. I'll put it in. Maybe we'll come back to regret that. I don't know. AbbVie's going to get added. They were another unanimous. And I'm for AbbVie, so that's like a no-brainer for me as well. I have no problem putting $10 into AbbVie. So now what to do with this last $10? I don't know. I mean, I like AT&T. I kind of like Duke. I know AT&T, they pay a bigger dividend, and we can look at that. But I know their debt is a lot more. And Duke Energy, to be honest, I kind of want to go with Duke. They are the front runner. I kind of want to go with Duke because I really think with our most recent change in power and looking forward towards renewable energy and things like that, I think that energy companies are going to do well. And also that energy companies, you know, they are kind of funded by their own municipalities. Like they don't make money off of us. They pretty much, they have a fixed rate that they have to charge us, and they make money off of their infrastructure and growth. That's how utilities make money. They make money off of their pipelines and things like that, not necessarily off of us. We pretty much get it at cost, okay? So with that said, I think Duke Energy has some room to grow. They are the biggest utility right now, but I think they still have even more room to grow. So I'm going to go with Duke Energy. And I said it before, like if you kind of want like a safe investment, you're going to go towards utilities. They're almost like the bonds of stocks, if you will. Like they trade pretty flat. The Duke Energy has a pretty good dividend, though. Their dividend is nothing to slouch at. 4.23. I said that's not that big of a deal. The PE ratio is high, but so is the entire market. And like I said, they're at a 39. If we look at some of the analyst ratings, that not too much, but I'm saying they're staying with their earnings. All right, so I'm okay with them, at least for the next year. This is a one-year challenge, so I think I'm pretty happy with that moving forward. So we head back to the spreadsheet. I had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 stocks. This is going to get to 18. I said that I'd probably get to like 25 somewhere throughout the year, and then we'll start doing some other things like that. And I will also start to maybe do some options, maybe do some spreads with $50. I can do some credit spreads, but I think that's a little bit more down the line. And I do want to do a more in-depth video because, like I said, this is more for the beginner, but I did say for all the people that joined me this week from my Poor Man Covered Call and the Leaps video that I would show my options. People have been asking what kind of all my options. So I'll show you all of them right now. And if you are a new investor, just take a look, listen to what I have to say. It might sound a little bit confusing, but this is something that, you'll be able to evolve into just like I did. So I have my main brokerage with Vanguard, but I use Robinhood because of the ease of trading options. So all my options plays are inside Robinhood. I do have some in Webull as well. If you haven't gotten 4 free stocks, they keep extending it, guys. 4 free stocks. Like, if you don't want to use the platform, click the link, put in $100, get the 4 free stocks at a minimum value of $21, and then pull your money out. Like, I'm not saying you have to use them, but if you don't just sign up, if you don't have an account, you're pretty much stepping over $20. So whatever. If you want to step over $20, I know you're sick of hearing YouTubers talk about 4 free stocks at Webull, but most of mine are right here in Robinhood. If you don't have that account, there's an affiliate down below for that. You can get yourself a free stock. But I have 2 stocks in here, and that's because something got assigned. So I have my Dropbox at about 121 shares of Dropbox. Super bullish on that. I made a video about it a couple weeks back. And Vuzi, probably like the stock that I'm most excited about moving forward. And you'll see with my options plays. So if we notice, I have a bunch of buys, 1, 2, 3, 4, 5, 6, 7, 8 buys. As we can see also with their expirations, the closest one is going to be in 7/16. And I'll bring a spreadsheet up of all of these. I use all of these stocks. I do the Poor Man's Covered Call with all of these. They have pretty good values, and I'll show you exactly what their values are in 1 second. But I think Vuzi is probably my favorite right now, $5 call. That stock is trading for, what do we say, $12 right now. So that's a position that I'm very, very happy with. But essentially, here's all my, you can see all my buys. So these are all the options that I bought. And then up here, these are all the covered calls that I have against those. So I'm selling covered calls without owning 100 shares of these stocks. Those are the 2 videos that I posted in the last 2 weeks, that people seem to really, really like. Let me show you my Poor Man's Covered Call spreadsheet also inside Patreon. You can get it there. And I'll show you exactly what all of this mess really means and like how much profit I'm looking at and things like that. Most of these pretty much speak for themselves. And guys, this spreadsheet was created inside my Discord by 2 amazing Discord members. We kind of tweaked it a lot. So shout out to you guys. You know who you are. Give credit inside there as well. So this was not mine. I got it from them, and it's just been awesome. And I've tweaked it to how I want. This is going to be the long call strike price. So this is the strike price on all of the leaps. Here's how much money I had to pay for each one of those options. Here's the days till expiration. So I have them sorted from the short ones that are happening in July all the way down to my 2023. So if we can see this net and right here, these are the calls that I'm selling against it. So everywhere where you see a positive number, that's where I sold a covered call and collected premium. What that does is it lowers the amount that I paid, right? So when you make a Poor Man's Covered Call, it is going to be a debit spread. But as you make more covered calls against it, that premium that you paid gets smaller and smaller. We can see the negative numbers, and here I also have parentheses because I just coded them different sometimes. But these are when I bought to close the option and rolled it out. So, right? So I'm rolling it out to further expiration. I'm trying to avoid assignment. So in this case, I got 90. I gave 55 back. So I usually am looking at profits about 40%. And then I sold another one and got 76. So we can see all these nets, and that's great. So we see the amount invested here, $640, which aligns with this. But here's actually the net. Here is the long call break even price now, and the strike that I have on those covered calls. Now, assignment profit, what happens if this short call gets assigned, right? Because right now we're assuming that this is all with my leaps. Those are all going to be in the money. So I'm assuming that those are in the money, all right? Now, with that, if my short calls were to get assigned, which is fine because I'm working at a delta of like 0.3, the profit is the difference between the 2 strikes minus the premium you paid, plus all the premium that you collected. So right here, each one of these show the total profit upon assignment of the short leg. So this is all from the covered calls if they were to get assigned. And you can see some of them have better returns than others. When you are doing this, guys, you want to make sure that your short call, right, your covered call, that strike price, the difference between them is large enough to make you a profit. The reason that this is so low is because if we look, my short call is 107. But my break even is really 106. So it's not that good of a deal for me. This actually, the Starbucks probably isn't one of the best covered calls for me. But as we can see, as we work down, like I said, right now it's looking all things considered, right? Best case scenario. Everything finishes in the money and I don't get assigned to any of these right now. 35% on my money. Right now, a total profit of $3,000. As you saw inside that portfolio is valued at about $7,000 right now. $7,890. So if you're curious about all these like covered calls and things like that, that's the other side of these videos. I like to make both to show you that investing can be easy and simple and as easy as an ETF, or it can be as complicated as selling options, buying options, and doing all these different things that you want to do that's best for your personal finance journey. I'll link both of those other videos down in the description before, even if you're a newbie and you kind of want to see a deeper dive into leaps and the poor man's covered call. I have no problem showing you those. And also, if you're a beginner and you want a beginner's look at trading options, JJ Buckner and I, we created a course, The Beginner's Guide to Trading Options. I'll leave that link down in the description below. It's launching February 1st, so we have a pre-sale on that. As I said, I'll leave that link down below. Give you everything you need to know about the basics of selling and buying options, the wheel strategy, and things like that. And until I see you on the next one, guys, stay positive, work really, really hard. Always please be kind to other people. Get down in the comments. Let me know how the first 3 weeks of your challenge are going. Are you having some better returns with your stocks than me? I hope so. Tell me what you're investing in. I want to get the conversation going. And for everybody else, I'll see you over in the Discord. Guys, thank you so much to all my Patreon members. I think we passed 150 Patreons this week. Like I said, I am blessed to have you in my life. And until I see you guys next one, cheers, guys. Thank you so much.